TFNN. Live at TFNN. Breakout Investing. With your host, Ken Shreve.
Good afternoon, everyone. Ken Shreve with you. Thanks very much for tuning in to another edition of Breakout Investing on TFNN. I'll be with you for the next hour until, let's see, I always get the time change different. I'm in California, so, till 1 o'clock Pacific time, 4 o'clock Eastern. If you want to give me a call, please do that. Let's talk about this market. Very interesting market going on here. The number to use is 877-927-6648. My show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern. The show is also available as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi. That's it, tfnn.mobi in your smartphone browser. And then click Listen Live, and you can listen to the stream that way as well. If you want to look at charts that I'm going over on the show, you can do that at tfnn.com and Tiger TV. Channel 1, the show is carried live on Tuesday and Thursday, and it is archived on Channel 13. And don't forget, whether you have an iPhone, Android device, any handheld device, you can also watch Tiger TV on your handheld device as well. All right, taking a look at a chart of the NASDAQ composite here with about 50 minutes left to go. I'm going to go ahead and update the NASDAQ composite here, see where we're at. And we'll see that, again, a contained day of selling in the tech index. It is down about 17 points, 0.5% to 3,088, sitting right at its 10-day moving average, just 3 points above it. So anytime I go over index charts on the show, whether it's the NASDAQ composite or the S&P 500, I always plot the 10-day, 20-day, and 50-day moving averages. These are support levels to watch right now. For the NASDAQ, it's sitting right at its 10-day. Next level of support underneath the 10-day moving average for the NASDAQ is going to be right around 30.35. 30.35, and then underneath that, the 50-day moving average at 29.49. At this point, for the NASDAQ composite, since December 19th, up 22%. It only has to correct another 4.4% from here to get down to its 50-day moving average. And I know I've been saying this on my show recently, but after a 22% gain for the composite, to come down another 4% from here, even tech index is still holding pretty close to its high. There's not much of a pullback at all. I do suspect that 50-day could be a very viable support level, and even if it does eventually undercut, which is possible, you could see just a violent shakeout, and then buyers come in here. So I'm still a bull. I know that the market needs to consolidate here. I know there are a lot of extended stocks out there. Really not interested in buying anything new here, not with all the recent distribution that we've seen in the market. I do think the chances are pretty good that we could pull back more than just 3 or 4 days. I think that the market could use a resting period here where maybe it's a consolidation, a time where it catches its breath for 3, 4, 5 weeks, something like that. But so we'll see how it shakes out. Why don't you take a look at the NASDAQ 100 as well, because this is probably the strongest performing index out there. Apple gets 18, 19, 20% weight in the NASDAQ 100. So a big reason for the NASDAQ's price performance certainly has been Apple. Look at the NASDAQ 100. I mean, it is still strong as well. It's only lost ground. This is working on a 2-session losing streak, selling pretty contained in the NASDAQ 100 as well today. down 14 points, 0.5% to 27.41. Now for the NASDAQ 100, you're looking at a 25% gain since December 19th. Would have to go down 5-6% to get down to its 50-day moving average, which is at 2,600. So that's about 140 points below where it is now. But you know, again, 140 point decline for the NASDAQ 100, considering where it has come from. Really not that big a decline. So I think the best thing for the market right now would be a little bit of a consolidation phase here. another thing I've been mentioning in recent weeks is just the crop of extended stocks out there is certainly large. It's hard to buy Apple up here after a huge move that it's made. Priceline, another big mover. So many big movers out there. So many stocks that have participated since the Nasdaq confirmed a new rally back on December 20th. That just a consolidation phase would be perfectly normal, and not to mention healthy. So that's a look at the composite and the Nasdaq 100. Let's take a look at the S&P 500. We'll see fairly contained selling pressure here. It's actually trading up near its session high today, only down 5.5 points, 0.4% to 1400 even. The S&P 500, you'll notice it did break below its 10-day moving average, but it is still holding above its 20-day line. Its 50-day moving average at 1361 thereabouts is only about 30 points or so from where it's trading currently. So that's a look at the S&P 500. I heard Tom O'Brien, I think it was last week, it might have been the week before, describe the market as deviant, and I just think it's such a perfect adjective for this market. It is such a deviant market. I mean, you have these IPOs coming out on a daily basis that are, doubling in price, and some of these companies are good companies. We'll get into some of them a little bit later, but it is a frothy IPO market, and there's a lot of excessive speculation going on in the IPO market, and that's not necessarily a good thing, because you tend to see that ahead of market pullbacks. Investors just, they know they don't want to get into Apple, they don't want to get into Priceline, they want to get into these stocks that have just been moving higher and higher and higher, so they go to these newer companies. There's a lot of euphoria, a lot of excessive speculation. So that's worth paying attention to too. Believe me, I'm a big believer in a vibrant IPO market. I like to see successful IPOs. I think some good money can be made in the right IPOs that are profitable and showing good bottom line and top line growth. But even yesterday, I see a name like Angie's List, not making any money. I mean, a decent business, but it's not profitable. You've got top line growth there. That stock was broke out yesterday, ANGI. In fact, let's just pull up Angie here. This is an example of just a more speculative IPO, and checking in on it today, you can see a big move yesterday and then a huge reversal today. It's down 7% to $17.58. So that was a strange move yesterday in Angie's. And then, a company like Yelp. I know Yelp has its fans, and Yelp shows good top-line growth in recent quarters, interesting business, but it is also not profitable, and some wondering when profitability is going to come for this new issue. So it made a big move yesterday, closed near its session low, and it's right now up about 8 cents to 28.17. But there have been some successful ones, and we'll go over a few more in just a little bit. Take a look at volume today. Let's go ahead and switch back to the Nasdaq Composite. And yesterday, it was after the close yesterday, my friends over at Investors Business Daily, they did change their market outlook in the big picture column. That is still a section of the newspaper that I check in with, and I find it very helpful in understanding market health, and especially their market outlook box, where they basically have three outlooks. The market's either in a confirmed uptrend. The next level underneath that is an uptrend under pressure, and then underneath that is market in correction, and that's where you really should be favoring cash and getting out of the market's way. Well, as of yesterday's close, the outlook went from confirmed uptrend to uptrend under pressure, and I completely understand the reasons why they did that. Yesterday was a rough day for the market. Even though the indices did close off their lows, volume did pick up from the prior session, so it was yet another distribution day or higher volume decline for the NYSE and Nasdaq indices. So headed into today, we had 7 higher volume declines on the New York Stock Exchange Composite Index. We had 5 on the S&P 500, and we had 3 on the Nasdaq. So 5 on the S&P 500 is a concern right now in the market. Even though we are trading lower, volume is tracking very close. There's not much juice behind the selling today. But if we had seen another higher volume decline today, this is the way the market gives you signals that it could be ready to to pull in. I run the Ultimate Growth Stocks model portfolio at TFNN, and I'm definitely defensive here. I've got 12 names in the model portfolio right now. The thing I'm noticing about my 12 holdings, and these are all mostly new initiations. I started a lot of them in January, some in February, and even a couple this month. But what I'm seeing is that I'm not in any rush to push the sell button, only because the vast majority of them, I think every single one of them, are holding above support. And those that are going down, they're going down moderately. They're going down in light volume. I'm just not getting any blatant signals from the market to quickly move to cash here. So I'm trying to be as patient as possible and let what I own work. And I want to hold on to my big leaders for as long as possible. I don't want to get shaken out and take a 10-15% profit. I want to be able to hold on to my big winners for a long time. So overall, the action in leading stocks, I'm not seeing anything alarming, but that could change. So really, it's about watching support levels, not only in the major averages right now, but in a lot of stocks that you own too. So again, volume right now in the New York Stock Exchange tracking pretty close to what we saw Wednesday. Same with the NASDAQ. Mentioned let's take a look at Apple here. Just a stock that does not want to really go down. Apple was under a little bit of pressure today. It's down $5.72, 0.9% to $611.90 a share. CEO Tim Cook is in China. Some are speculating that a deal with China Mobile could be in the works to carry his Apple iPhone. I think we'll be looking at carrying the iPhone 5 sometime in 2013. So Tim Cook doing some schmoozing in China. I think yesterday he was at that Foxconn plant that makes the iPad. That was the plant that had some labor difficulties. But so Apple, again, down 0.9% today, still holding above its 10-day moving average. Its 50-day moving average is all the way down $520 a share. So it still has a ways to go. And I think it would take some pretty serious selling in the Nasdaq 100 and the Nasdaq Composite for Apple to come all the way down there. But we'll see. We'll see how it shakes out. I know that right now I'm not interested in buying the stock. I really would like to see it base and consolidate gains for a little while. Let's check in on a couple of other NASDAQ 100 names here. Intuitive Surgical, another big leader, really not showing much in the way of sell signals, low volume declines. Intuitive Surgical down about 0.5% today to 541.94. You see it is still holding above support levels, and we'll check in on Priceline as well. Priceline is a current holding in my model portfolio. Shares of Priceline up $2.10 today, outperforming to $720.30. We'll be right back, folks. 4 minutes. Stick with us.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Going to take a question right now from the chat room at TFNN.com called the Tiger's Den. Have a question about Quest Diagnostics, a diagnostic testing company serving the healthcare industry. It's and we're looking at this right in Tiger TV right now, but it's like decent volume in the stock today. It's outperforming, up 1.3% to $61.23. And what you have with Quest is a pretty good base taking shape here. Anytime I talk about a base, I talk about a period of time where a stock consolidates gains and just moves sideways, and then eventually sets up to take out a recent high. So you have a swing point here of 61.47. That was set back in January, I believe, January 25th, specifically 61.47 right here. A couple of issues with Quest Diagnostics that I'm concerned about. Not seeing much in the way of accumulation in this stock. Anytime a stock is about ready to take out a swing point, you really want to see strong volume. Not just one day of volume, but you want to see consistent signs of accumulation. It's been pretty neutral in Quest in recent days. In fact, you did have a big heavy volume decline just a few days ago on March 23rd. You see this big volume bar down here. Came down to its 50-day moving average, touched it, has been rallying back in mostly light volume. There's a little bit of volume in the stock today, so that's compelling. The other thing about Quest Diagnostics that I'm a little lukewarm on is that I like good fundamentals and good technicals. And, Quest has a pretty good track record of growth, but it's just kind of lackluster growth. Top line growth of 2-3% over the past 3 to 4 quarters. So it's not a bad company by any means. It just strikes me as a bit sluggish here. It's not to say that it won't be able to take out that 61.47 price level, because technically it looks okay. It looks better than average. I think if you were to buy the stock here, you just set a stop underneath 58.50, 58.25 or something like that. But it is outperforming today. Not a bad company, just not one of my favorites in the healthcare space. All right, taking a look at crude oil today, down 2.5% to 102.78 a barrel. Oil has been under a lot of pressure lately. In fact, let's take a look at a ETF, ticker symbol USO. This is the U.S. oil fund, which basically tracks the spot price of West Texas Intermediate Light Sweet crude oil. Breaking down today in heavy volume, it is down 2.3% to 39.25, and you can see this is the 50-day moving average here. Breaking below that. Definitely some signs of distribution in the USO. Looks technically very weak here. Taking a look at crude oil, and I'll throw up a chart of the GLD here. Gold. Did I say crude oil? Gold. Let's take a look at gold. Down 0.3% to $1,652.20 an ounce today. The GLD is trading up near its session high. It hit an intraday low of 159.81. It is now down 32 cents, 0.2% to 161.19. So the GLD still looks troubled here to me as well. Kind of showing very wishy-washy technical action. Not clear to me that this is going to go under accumulation anytime soon. A lot of distribution in the GLD recently. It usually takes some time to recover from. Another story stock today. Let's take a look at shares of Fossil. Normally, a stock gets added to the S&P 500. That's good news. And shares of Fossil kind of been trading all over the place today, but Fossil right now is up 0.8% to 133.77. Has been a monster price performer, no doubt, in the market. Ticker FOSL on the Nasdaq. Anyway, it is replacing Medco Health Solutions in the S&P 500. Normally, a stock gets a nice pop on that news, but muted response so far for shares of Fossil. Economic data earlier today, weekly jobless claims, not too bad, down 5,000 to 359,000. 4-week moving average is now at 365,000. And the final estimate to fourth quarter gross domestic product comes in at 3%, unchanged from the second estimate. There were some people that were unhappy with it, but it was a mostly inline reading. So fourth quarter GDP up 3%. Coming up tomorrow, we've got personal income and spending data for February, the latest reading from the Chicago Purchasing Managers Index, and finally on Friday, the final March reading to the Michigan Consumer Sentiment Survey. All right, folks, when we come back, we're going to talk about two more IPOs that are doing well today. Cafe Press, and that's ticker PRSS. And then there was another one today. Millennial Media operates mobile advertising platform. Both stocks doing well. Pretty vibrant IPO market. Like to see it, but we'll take a look at the two latest ones when we come back. You're listening to Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. I'm going to take another question from the Tiger's Den here on a stock called Adams Resources and Energy, ticker AE. Trades on the American Stock Exchange. Don't look at too many stocks on the American Stock Exchange these days. First thought on Adams Resources and Energy. It is a stock that gets high ratings from Investors Business Daily. Good composite rating, clearly a stock that has been under accumulation. It is a oil refiner, a marketer. It is a microcap stock, market cap of $275 million, thinly traded too, average daily volume somewhere around 25,000 shares a day. That said, it does have a little bit of mutual fund sponsorship, but again, this is a stock that's a little too thin for me. I'm not sure if the person owns it or is thinking of buying it, but right now we'll see the stock is having a rough day today, down $8.79, close to 12% to $65.15. Is the stock on sale here? I wouldn't touch it. It is still holding above its 10-day moving average at 62.68. If you are long the stock, certainly a reason after a big price decline like this and huge volume, reason at least to take some off, depending on where you bought it, because, this was a stock. In fact, I did save a weekly chart here. Let's take a look at Adams Resources on a weekly, and you'll see almost a parabolic move here, but you had a breakout in, let's see when that was. I'm going to just check another chart here. You had a breakout over a swing point of $29 a share. That took place earlier this year in January. Here was the swing point right here. You had a breakout. Now, sometimes when you get a powerful breakout over a swing point like this, you can see what's called a high tight flag form here, where the stock breaks out over 29 and it runs up 100% in price. Adams Resources did that. What the thing is that it never formed the flagging action. In other words, what happens is that a stock breaks out, runs up 100%. Very rare to see that happen, but some stocks do it. But after it goes up 100%, then you want to see a little pullback, 5, 10, 15% for 3, 4, 5 weeks time. You never had that with Adams Resources. It basically just kept going higher and higher and higher. Now what you have is a stock that's very extended. Excellent bottom line and top line growth for a microcap stock. It certainly does have a lot of positive qualities, but at this point it is a stock that needs to base, and certainly its action today is cause for concern. Very, very heavy volume. Stock is down 12%. So if you're looking to get long, I would not touch it here. I'd let it base, consolidate gains for a while. If you are long, no reason not to take some money off the table here. All right, taking a look at some IPOs today. Cafe Press. This is PRSS on the NASDAQ. Went public today. The chart's going to look kind of funny in my program here because it's its first day of trading. But shares of Cafe Press right now up close to 3% to 1955. So kind of a lackluster day for this company. They priced at 19 last night. That was at the high end of actually a little bit above the proposed range of $16 to $18 a share. But Cafe Press operates e-commerce sites where you can make and buy and sell all kinds of personalized products. My general rule with IPOs is that I would like to see them trade for at least 2 to 3 weeks and let's see what kind of trading personality develops before considering buying. Let's also take a look at Millennial Media. This is ticker MM. Millennial Media. Much better day for this stock. It priced last night at I think it was $13 a share. Let me double check that. Millennial, priced at $13 a share. That was at the high end. It was going to proposed price between 11 and 13. This stock's having a big day today. Another example of quite a bit of froth here. Up 92% today. Wow, $25.02. So up big, $12, up $12.02. This is interesting because this is basically all about ads on mobile phones. That's what Millennial Media does. Operates a mobile advertising platform, and my question about this is that I see ads on my cell phone all the time. I don't remember one time where I've clicked an ad on a cell phone. First of all, even if you do it inadvertently, it takes so long for the darn ad to come up. I just kind of close it out before it even comes up, so I never see it. But this is another company. It's just like, show me how you're going to make money here. It's kind of a big question mark, kind of a nebulous business model. But everybody's talking about mobile advertising and the potential, and I don't doubt that it does have potential. It's just I'm still looking for one person that has clicked an ad on their cell phone. I just don't know too many people that do. Yesterday there was a very good offering, BNNY. A lot of people scoffed at an 89% move for Annie's when it came public yesterday, but the stock is following through today, up $2.40. Almost 7% to $38.32. Annie's was offered at $19 a share, closed Wednesday at $35.92. With Annie's, you actually do have a bona fide growth story here, though. So, I can look at a price gain like this and say, there is a fundamental story that's driving the price performance here. Annie's is an organic, natural food company. Apparently, their mac and cheese is pretty darn good. I haven't tried it. Know people who say their product is all over their house. But what's interesting about Annie's is that in 2009 they made 8 cents a share. That was their first profitable year. That was in 2009, 8 cents a share. 2010 they made 35 cents a share. So 35 versus 8 cents. You can figure out the growth there. In 2011, they made $1.16 versus 35 cents in 2010. So you're really looking at a company that is showing explosive annual earnings growth. And, for that reason, you can't be surprised to see that this is a stock that's catching a bid here. Good growth, and apparently the market thinks that a multiple of 30 or 40, whatever it is right now, is justified. So a couple of interesting IPOs. Great place for IPO information is a website I use called IPOhome.com. It's run by Renaissance Capital, but I was looking at the site yesterday, and they said that headed into yesterday or today, there were 134 companies that have come public so far in 2012, averaging a 33% return year to date. So pretty impressive performance so far by the IPO market this year, and some big movers of late. No doubt. Let's take a look at shares of Tango today. Some other new issues. Tango came public last year, late July, at $10 a share. I did a video earlier this week over at the street about Tango. The stock is up 2.3% today to $19.44. I think I've mentioned Tango on the show before, but interesting outperformance today. This is a company that offered 8 million shares at $18.50, so demand is pretty strong. They make life cycle management software, which basically helps companies kind of see a product through development from beginning to end. So shares of Tango, another recent new issue, performing quite well here. And also check in on Click Technologies. Not a new issue, but it's a relatively new company. I think it's been trading for a couple of years now, but Click Technologies still acting very well, only down a little bit today, down 27 cents to 32.06. You had a recent breakout over $32 a share. Kind of selling in the broad market is impeding the breakout a little bit, but Click is in a very dynamic industry group. I think an industry group that will continue to be ripe for consolidation. Click makes business intelligence software. You got a lot of big players in the space like IBM and Oracle that are constantly looking for acquisitions, and some of these small cap names like a Click Technologies that are smack dab in the middle of business intelligence software. Basically, that software helps companies analyze customer data, helps them operate more efficiently. So Click Technologies performing pretty well today. And let's also take a look at InventSense. Volatile stock here, but impressive performance today. It hit an intraday low of $17.76. Now trading at $19.50, up 3%. So it came right down to its 50-day moving average. I really think the 50-day moving average here for a lot of stocks is going to eventually come into play, and I think your big leaders are going to find support there. And those that don't and fall through that support level in heavy volume, could signify the end of their runs. But I think there are a lot of big leaders out there, a lot of strong performers that are ultimately going to firm up at their 50-day moving averages. So InventSense touched the support level today, trading up near its session high at $19.50 right now. So InventSense makes motion sensor chips. Their technology is in the Nintendo Wii system. So InventSense, another new issue. They went public in November at $8 a share, and it's more than doubled. So another company with good fundamentals and good price performance. A lot of earnings reports today. Let's check in on H.B. Fuller. FUL on the New York Stock Exchange. Fuller's having a great day today, up 4.2% to $33 a share. H.B. Fuller makes adhesives, sealants, paints, other specialty chemical products. Bottom line growth, solid, up 52% from a year ago to 44 cents a share. Sales up 11% to $375.3 million. And let's see, I think I have a weekly chart for H.B. Fuller. Here it is. So we go from the daily to the weekly, and you can see a big breakout for H.B. Fuller. over $25 a share. Looking a bit extended here. Here's the 10-week moving average. You'll hear me talk about moving averages a lot. The 50-day moving average is plotted on the daily chart. The 10-week moving average, which is the same time frame, is plotted on the weekly chart here. So the numbers will be very close, but the 50-day and the 10-week moving average aren't going to be exactly the same. But H.B. Fuller, tough stock to chase up here, but a company that continues to execute as their latest earnings report showed. Let's check in on shares of Mosaic today. MOS on the New York Stock Exchange. Mosaic under quite a bit of pressure today, down 5% to 55.33. They talked about strong demand going forward, but investors didn't like the fact that earnings down 40% from a year ago to 72 cents a share. Sales down 1% to $2.19 billion. A couple of other stocks in Mosaic's industry group, Potash and Agrium, got new coverage today from Stifel Nicholas. Started both companies at buy. Let's check in on Potash here, POT. And we'll see that it is upgrade did not help shares of Potash. It's down 1.8% to 45.28. Check in on Agrium here, also an ag play. Agrium down 0.8% to 86.07, and also noticed a lot of selling pressure today in CF Industries. Really the standout performer in the group. CF Industries looking very weak technically here, down 2% today to 179.46. It is now trading below its 50-day moving average. So, despite recent weakness in the market, the number of instances of stocks that have broken through key support levels like this are still very, very small. In other words, you look at the big leaders over the past 3 months, very few instances of stocks that, are breaking through support in heavy volume. All your big leaders, many are holding above their 10-day moving averages, many more holding above their 20, and the vast majority holding above their 50-day moving averages. So let's take a look at Red Hat too. Red Hat just had an incredible quarter, and when you see a 19% gain in a stock like Red Hat has today, up 19% to 61.31, you immediately think short covering. But ironically, Red Hat short interest is not very high at all. So I think this is an instance of just a lot of people buying the stock because it's a cloud play, it's a virtualization play. They are an open source vendor. Basically, Red Hat provides and also maintains open source Linux software for enterprise clients, and Red Hat has also been expanding into storage and virtualization as well. So you've got a lot of catchwords there that Red Hat is involved in. But earnings were pretty good. Sales growth decelerated a little bit, up 21% from a year ago to $297 million. Earnings up 12% to 29 cents a share. But clearly a very, very bullish day for Red Hat, and not surprisingly mentioned virtualization and Red Hat's involvement in there. Not surprised to see VMware also up near its session high today. Definitely riding Red Hat's coattails here. VMware up 3.8% to 112.76. This is yet another stock, though, VMware, that is a very tough buy up here. It had a breakout recently over $102 a share. Still acting well, but it's extended, and you don't want to buy extended stocks. So we head into the break here. Let's take a look at shares of Best Buy. News not good here at all. I think it was Goldman last week came out with a pretty bullish note saying, hey, we could see a raised dividend. A lot of volume came into Best Buy last week, but the stock is down 7.25% today to $24.69. Revenues missed. They're announced a 3-year, $800 million cost-cutting plan. They're shuttering 50 stores. Competition eating this company alive, and stock is suffering as a result. All right, headed into the last segment, folks. Thanks very much for tuning in. You're listening to Breakout Investing on TFNN. We'll be right back.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. As we head into the close here, 5 minutes left to go in Thursday's session. Look at these markets. Unbelievable. The Dow, I didn't even think we looked at the Dow earlier in the show, but let's take a look at the Dow Jones because it has turned positive, now up close to 15 points, only 0.1%, but after hitting a low of 13,032, it is now at 13,141. So impressive comeback for the Dow and the other major averages for that matter as well. Checking in on the S&P 500 here, we'll see it is now only down 1 point to 1404. 1404. S&P 500 came down close to its 20-day moving average, up near its session high, so a resilient performance here. And not surprising to see the NASDAQ Composite also up near its session high. It hit an intraday low of 30.69, now trading at 30.99, up about 30 points from its low. It is still down a little over 5 points, but impressive performance as well. Is the market on the ropes here? It's a tough call. I mean, you've got distribution in the market. You've got 5 higher volume declines in the S&P 500. I did say at the top of the show I own several stocks still in my model portfolio, and I don't want to be too quick on the sell button here. I want to really identify my strongest performers, the ones that I think have the best chance to outperform, and give them as much room as possible to work. It's not about taking a 5% gain here and an 8% gain here and a 12% gain here. It's about buying a stock at the right time and holding on to it for a big gain and being patient. So while there are signs of distribution in the market, not so much on the NASDAQ, but in the S&P 500, and even more so on the broad-based NYSE Composite. All that said, what we've been talking about during the show, the fact that there are a lot of stocks out there that are still holding support, and the fact that a lot of leaders are holding support is a big reason why I have not been eager to just start selling, even though I think there's a good chance the market could come in here. We just look at the market's performance today. There are still buyers around, no question about it. There's still buyers around, so we'll just kind of monitor daily headlines, see how the market responds to these headlines, but for right now I see no reason to run for the hills and start, raising large amounts of cash here. All right. Let's check on some earnings reports. We've got earnings reports after the close from Research in Motion. I talked about Best Buy's earnings reports. I mean, these are two entirely different companies, Best Buy and Research in Motion, but two, big similarity between the two, just companies that are getting eaten alive by the competition. In terms of Best Buy, it's the discount retailers like Walmart, Costco, Target, and Amazon, of course, the online retailer, really proving to be a thorn in Best Buy's side. Research in Motion, obviously getting their eaten too by Apple. Shares of Research in Motion reporting earnings after the close today. Stock is up 10 cents, almost 0.8% to $13.77 ahead of the results. Earnings expected to be down 54% from a year ago to 81 cents a share. Sales down 18% to $4.5 billion. Hard to believe that company's still doing $4.5 billion in revenue, but again, I think they did about $5.5 billion in the year-ago quarter. Lots of buyers in TIBCO Software. Again, this is a hot industry group right now in the market. Shares of TIBCO up 4.4% to $32.37 ahead of its earnings report after the close. Earnings expected to be up 19% to 19 cents a share. Sales up 20% to $222.4 million. TIBCO Software reports after the close as well. Coming up next, the Tom O'Brien Show on TFNN from 4 to 6 Eastern. Have a great afternoon, everyone, and we'll speak to you soon.